Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of July 31st through August 4th, where we'll talk about how to make money trading and the fallout from the latest Fed interest rate hike. So we'll review what happened in the latest Fed interest rate decision, the latest Fed interest rate hike, and again, how to make money trading in the fallout from that latest Fed interest rate hike. So we've got a lot to discuss this week, so let's get started. Welcome, Ellen Krentz. Glad to see you. And yes, you were early. Walter Lyons, thank you for joining us in the live chat. So here's our Google document with our notes for part one of our weekly trading game plan for this week of July 31st through August 4th. We keep our notes in a Google document that's publicly accessible. You can find a direct link to this Google document in the description box below. In our notes, we have links to bonus videos, the tools, resources we use for all our market analysis, etc., our strategies, trade ideas. So we keep our Google documents with all of our notes in a publicly accessible Google Drive folder, so you can refer back to these notes as well as notes from our previous weekly trading game plans in that publicly accessible Google Drive folder. And again, you can find a link to that folder in the description box below. So we'll get started, see how the markets ended up on Friday. Again, we've got a lot to discuss, so we'll try to keep moving along. Welcome to Ricky Khan. Glad to see you as well in the live chat today. So we see on Friday, all of the indices ended up. NASDAQ almost 2%, 1.9%. S&P up almost 1%. And the Dow rebounded after just breaking its streak of 14 days green in a row. It got 13, missed one, and then back in the green. So we see 75 to 25. Advancers to decliners, almost 80% new highs, 78%, 21%. We've got 70-30 above the 50-day moving average and about 60-40 above the 200-day moving average. So again, very bullish in general. We see the mega cap tech stocks bounce back. We'll talk about a little bit of a retracement on Thursday and what caused that. But then again, we see a resurgence back into the mega cap techs. Welcome, MD. Thank you for joining us. Glad to see you as well. So we see uranium mines. August used to be the best month, and it became the worst. We'll talk more about how to make money trading in August, probably next week. Banks still losing deposits. China moves to bolster consumers. And the U.S. is sticking the soft landing. So we saw oil surged up over 80, retraced a little bit. Now it's back up over 80. So now we've got support at 80. Natural gas still bouncing between 250 and 3. We saw gold did surge up above 2,000, then retrace a little bit. So again, it's trying to break that 2,000 mark, and we see the futures are all looking green right now. We saw the dollar strengthen a little bit. Again, we'll talk about what the Bank of Japan did and talking about tweaking their bond yield curve support, and that strengthened the dollar briefly and then weakened a little bit. So we see some recovery. We also saw the treasuries on that Bank of Japan announcement. The treasuries 10-year went above 4%, and then we see it retrace slightly, although we still see significant inversion in the yield curve. So welcome, Easy Mike. Glad to see you as well. Nagam, thank you for joining us. So we'll quickly look at the groups, sectors, industries right now. Again, in the FinBiz. Let me grab a quick drink a sec. So here's the sector, the groups breakdown. Also, please let me know if you all like the light or dark theme better in FinBiz, and we can accommodate accordingly. So we see on Friday, communication services, cyclical, and technology. So again, we saw a rotation back into risk on, mega cap techs, etc. So your defensive sectors, consumer defensive did okay, but your utilities, real estate, again, the real estate got, there's an impact from the interest rate hike. So that's part of the fallout from the interest rate hikes, is there was some decline in real estate. For the week, again, communication services, cyclical, so mostly risk on, technology, basic materials were somewhat positive, and again, real estate, utilities, healthcare, again, your defenses were the losers for this week. And again, similarly for the month, although, energy ended up the week just slightly positive, was very positive for the month. And for the quarter, again, pretty much a risk on sentiment for the quarter. So look at the individual industries. So again, internet retail. So that was your communication services, education. I see uranium rotated back in, had a positive week in uranium. Been talking about that sector rotation for quite some time. Steel rotated positive. Semiconductors was pretty positive. Gold, again, we saw it surge up above 2,000. So your negative. Solar was split, and tomorrow we'll talk about probably more detail about some of the impacts of the solar stocks and what's the dichotomy going on there. See some of the REITs underperforming: healthcare, specialty, industrial. So again, for the week, some basic materials, copper, steel. We saw a rotation back into coke and coal was positive. Again, some of the sector rotations we've been talking about. Most negative, you see gold for the week was negative. Silver, again, started to bounce back. We'll see that again in the futures. And again, solar was pretty negative. So again, we've been talking about that sector rotation in and out of solar as well. So let's talk about the economic data in general, and in specific, we'll talk about the fallout from the latest Fed interest rate hike. So I'll just go over some of the highlights, and then we'll look at the whole calendar in investing.com and see what's coming up also for the next week. So the big news, not much from Monday, Tuesday. Again, we want to talk about the fallout from the latest Fed interest rate hike. So as expected, and as we looked at last week, the probabilities for this interest rate hike, it was pretty much expected, 99% chance that they'd hike 25 basis points, and that's what we got. So no surprise there. When we get to our strategies, we'll see what the probabilities are for future hikes in September, October, November. I just want to go over some of the comments that I picked out of the FOMC statement and also the press conference. So some of the things from the statement: inflation remains elevated, so it's still well above their 2% target. Their future actions will depend on the impact of their tightening. So there's still quantitative tightening, still credit is tight, and economic and financial development. So again, more data dependent. Fed says it will continue to reduce its bond holdings. So again, as described in previously announced plans, so they're sticking to their plan of quantitative tightening. So again, that is a part of the tightening impact will be their reducing their bond holdings as planned. Some of the comments I picked out of the press conference when Powell was speaking: labor market remains very tight, data-dependent approach to further rate hikes. So again, they're going to be looking at, they've now got 2 months worth of data, CPI data, employment data, etc. As August, they don't have a meeting. They've got the Jackson Hole meeting. We'll see when that is in a few minutes. Core inflation is still pretty elevated. So again, core CPI, core PCE is still high, although it is slowly coming down as we've seen. Need to hold rates high for some time. So again, higher for longer should be the expectation. And they are determined to stick to their 2% inflation goal. So again, they're determined to bring inflation back down to 2%. Fed won't be cutting rates this year. Last week we looked at the probability, and the market was still pricing in a rate cut in December. And Powell has been saying and continues to reiterate that they won't be cutting rates this year. So that's part of the battle between the Fed and the market. Is that's what the Fed keeps saying, and the market keeps disbelieving that. And they don't see inflation coming back until 2%. Until 2025, and they're determined to stick to that goal. So again, they're going to keep tightening until they see that their inflation goal is going to be met. So I hope that synopsis, those comments that I picked out from the press conference and statement are helpful. And again, we'll talk about, how do we make money trading in this fallout given this 25 basis point rate hike. Thursday, we got important jobless data, GDP data, and PCE data. We see continuing claims was a little less than expected. So again, people are able to find jobs. The quarter two GDP was more positive, and higher than expected. So again, we're not in a recession for quarter two, and it looks like the economy is doing better than what was expected. So if we even have a technical recession, we wouldn't know about it till quarter four, as that would require 2 quarters of negative GDP, and we don't have any right now. So the economy's strong, job market's still strong. Core PCE came in a little less than expected, but again, inflation is still elevated, but it is slowly coming down. See initial jobless claims, again, less than expected. Job market's still good. The 4-week average below expectations. PC prices was low. Consumer spending a little bit down. So again, all the economic data says the economy's healthy, strong. Job market's still strong. So again, the Fed can continue to hike and not have to worry about a recession or high unemployment at this time. And Friday, we got more core PCE data, again, a little less than expected year on year, as expected for June. Personal income was a little below expectations. Personal spending was a little higher. And we got sentiment data on Friday. So the 5-year inflation expectations came in a little bit below expectations. Sentiment was a little bit less than expected, current conditions. So the consumer was a little less positive than was expected, but the current inflation expectation was in line. So again, all the data that we're getting is pretty much as expected or a little better than expected. So therefore we keep seeing, the markets run up, and, unless we get some data that tells us something different, that would be the expectation. So I'll jump over and see if I missed anything in investing.com, and then we'll look at the economic data for next week. So PMIs, a little less than expected. Housing prices, still a little higher than expected. Crude oil stocks was positive, although again, we saw oil prices go up. Mortgage rates as expected. Building permits pretty much as expected. So the housing, the new home sales was a little worse than expected. Crude oil inventory is a slight draw. Got the Fed interest rate decisions. We talked about jobless data. Talked about core PCE data, talked about Michigan sentiment. Baker Hughes, again, a reduction in oil rigs. So the U.S. producers are slowly reducing the number of oil rigs. So that's going to hold oil prices up. I know some of the oil companies' earnings were a little weaker because we had, oil prices drop down to 70 and below, and now it's back up to 80. So their earnings should rebound. And again, they're reducing their production to keep oil prices up, keep their profits high. Next week, so we've got some PMI on Monday, some construction, ISM manufacturing, JOLTS data. So again, on Tuesday, we'll get the open jobs. So that'll tell us, is the open jobs reducing? Is the job market tightening a little bit? Mortgage data, oil, standard stuff, job cuts, continue. So we get more jobless data on Thursday. And ISM non-manufacturing. So, some minor economic and our typical jobs data, and then we get payrolls on Friday. So again, more employment data on Friday. So, those would be the areas of volatility. While we're here, we can look at the earnings calendar. Again, you can see the whole earnings calendar. We're right in the heart of earnings. Earnings matter again. I put a reference we'll see in the notes to our video on how to trade around earnings. So you can see this whole list here. And in a minute, we'll look at an abbreviated near-term list in Webull as well. So I believe on Tuesday, we've got some of the mega cap techs. I believe like Amazon is on Tuesday. So next week, there's Monday. SoFi I saw. J&J, Snacks, Energy. Again, tons of earnings. There's AMD, Pfizer on Tuesday, Caterpillar. So again, keep an eye on who's reporting earnings. Again, if they miss, they might be punished. There's Rockwell Automation, Energy. We're fine for Amazon. So Amazon is, on Thursday. So there's Apple, Amazon on Thursday. So, and Bud, etc., Stryker, Airbnb. So Thursday, big day for mega cap technology. So, Microsoft kind of missed on their cloud computing. But again, all the mega cap techs are talking AI. There's people are counting how many times they say AI. So we'll see how many times Amazon comes out and Apple comes out with AI, and if that helps boost their stock price or not. So again, big day for mega cap tech on Thursday. So again, you can peruse this whole list. Again, we're right in the heart of earnings season, so it's worthwhile to see who's reporting, what sector they're in, what impact it might have on sympathy plays in the same sector that you either own or are looking to trade. So again, I would highly recommend you keep an eye on the earnings calendar. So I hope that helps. And again, I have a link to our video on how to make money trading when earnings matter again, and earnings definitely matter again. So I hope that also helps. So upcoming FOMC, again, there's no normal FOMC meeting in August. They have their Jackson Hole Symposium. That's August 24th to 26th. I put a link to information that I was able to find on this year's Jackson Hole meeting. So there will be some commentary coming out of that. What's their strategy? What do they think of the economy, etc. in August, and we'll talk about the fallout from that as that occurs. But the next meetings are September, end of October, early November, and then December. So as part of our strategy, again, we'll look at the probabilities now being predicted for additional rate hikes in those months. So I hope that helps. Okay, we looked at the earnings calendar. Now I'll jump over to Webull and we'll look at the markets. Grab a drink a second. Just a quick reminder, if you're not already using Webull, they're still offering 12 free fractional stocks. If you sign up on a new account, deposit any amount, they're still offering, let's see what they're still saying, 5% interest rate on cash in a cash account, on uninvested cash. So pretty good for your idle cash. So again, you'll see we use Webull for our market analysis, due diligence, majority of our trading. So if you're not already using Webull, if you use the link, our affiliate link in the description box below, you can also help support our channel and get 12 free stocks and a 5% interest rate. This is the online browser version of Webull. I'm on the market screen. We can see the histogram of advancers and decliners on Friday. So we see, almost, more than 2-to-1 advancers to decliners. The percentage advance is relatively small. The percent decliners relatively small as well. Net inflow, again, we saw more into the NYSE, again, outflow out of the NASDAQ. So even though the mega cap technologies, although the NASDAQ outperformed, we see a pretty significant outflow on Friday. We've seen that for a couple weeks now as well. So again, as I mentioned, you can see a near-term earnings calendar on the calendar section. Just hit earnings. Also see dividends and splits. We see who's after market close, before market open. So we see, pets, etc. in the near term. So there's UAN. I know some people are watching UAN. Look at the best performing industries for the week. So education services we saw was positive, containers packaging, paper positive, semiconductors positive, uranium very positive, again, rotation back into uranium, construction pretty good, retail not so great, a little positive, real estate some positive, metals and mining kind of split, some specialty retailers, transport's kind of split, computers kind of split, investments, I think last week or so we saw that was more positive, a little bit of a rotation out of there, software and IT kind of split. Look at the ETF, see which direction they're pointing for the market. So positive on China. China markets had a nice run on Friday. Further, support, stimulus, emerging markets. That's one of the topics hope to get to today. That Easy Mike requested we talk about emerging markets. So I hope to be able to get to that discussion today. Again, emerging markets positive, Dow positive, S&P positive, mid caps positive. Pointing up on the VIX, short on the yen. Small caps, Russell, small caps positive. And again, China positive, Europe positive. Industrials very positive, healthcare positive, energy, communication. The negatives are utilities, technology, basic materials, pretty much all positive on Friday, even defensive. So it's mainly utilities, real estate were negative, a little financial negativity. Commodities, nickel, base metals, nickel, copper. So again, your base metals. Asia positive, emerging markets. So you can see the theme, emerging markets, pound, euro, Canadian dollar, Swiss. So all indicating, weakening dollar. We did see the dollar weaken after the, a little bit of a reaction to that Bank of Japan yield curve loosening discussion. Then we see the foreign currencies recover somewhat. We'll see that in the futures in a minute. So let's look at the futures. Let me go to the indices. I skipped over the indices, so let's look at each of the indices in detail, and then we'll look at the futures for the indices. So we see SPY broke above its upper trend line of its channel. It's riding pretty high, pretty exuberant run. It's still significantly above the moving averages. So again, it's up above that trend. We see very bullish, very exuberant run. Still got significant room above the moving average. Potential to go retest that high. It looks like at 462. So it's very close to the previous high. Might get some resistance there. But again, very exuberant run at this point, and no reason really to expect, we might get some retracement, some corrections, but no real reason to expect that to change anytime soon. Same thing with the Qs. Again, very exuberant run. It's broken out from its previous high, headed for, essentially all-time highs. So again, a lot of exuberance, a lot of greed. So, our adage from Warren Buffett, be fearful when others are greedy. Well, there's plenty of greed. So, and the Dow, even though, it had that 14 or almost it had a 13-day positive run, almost 14, got 14 out of 15. It's broken above the high, but, it really didn't make a significant movement. Small positive up movement, so we may see some slight correction. It's not as far from its moving averages. So again, even though the news was 13 days positive, the moves were not major, not as significant as the S&P and NASDAQ. Look at the VIX. Again, it has not really been able to hold any pops. Got a little bit of a pop on that BOJ news, a little bit of a pop on the Fed interest rate hike, but again, it very quickly retraced back down, and the actual VIX, I believe, is again under 14. It's in the 13s again. So we'll go back to the futures. I see you guys talking about Disney, and we'll talk in more detail about Disney tomorrow as well. And yes, Alan Krantz, isn't Florida always warm in the summer? Yes, it's warm, and it's much warmer inland in Orlando than on the coast where we are. So again, in the futures, we see positive on all of the indices, near all-time highs. See the Russells a little bit flatter. I've seen the Nikkei, with that Bank of Japan, it popped back up. Euro stocks and the DAX, again, emerging markets, and we'll talk more about that theme in our strategy section. But you see a European stock market, the German DAX all popped up. Again, the Nikkei popped up on that BOJ news. See again, oil up over 80. Again, 80 is it's gonna test and bounce around that 80. Once it holds above 80, they're talking, 90 plus again. So we'll see. Again, natural gas pretty range bound between 250 and 3 right now. Volatile as always. Again, gold, it did break above 2,000 briefly. It's going to have to, work to test that 2,000. Once it can hold above 2,000, then, it can go back and retest its previous high. Silver, again, got support around 24. It's testing between 24 and 25. Didn't hold that support above 25, so it'll have to work on breaking that support at 25 again. But again, positive upward trend in general. Copper bounced back. Not so much palladium, platinum. Look like they rolling over a little bit. Commodities, rolled over. Corn, wheat, even though the Russia-Ukraine situation, it peaked up briefly. It's retracing right now, so we'll see how that occurs or resolves itself. Lumber's dropping off. And then again, we saw the bond yields briefly popped up above 4% again on that BOJ news, and then recovered, bottomed and bounced off on Friday. So I would kind of expect the bond yields again to get up over 4%. So we'll see if it retests that bottom again. Again, we saw that the dollar was strengthening, and then topped out on Friday, allowing the other foreign currencies to recover somewhat. So right now, DXY is just over 100, 101 after we saw it break down below 100. So. Going to skip over ETFs right now so we can talk about our themes and strategies. I may, depending on how much time we've got today, we can come back and talk about ETFs, or I can defer that till tomorrow if we don't have time today. Again, I want to be able to talk about the fallout from the latest Fed interest rate hike. How do we make money trading this? And then also, hopefully, we'll get to our discussion topic on emerging markets if we have time. So I want to quickly jump over to the Fed interest, to the Fed rate monitoring tool. Again, we've got videos in more detail on how to use these tools, and you can find these links in the notes as well as in the reference link section in the links section of our homepage. Again, our homepage, beachbumtrading.com, bum without the U. So again, we have links to resources, tools that we use in the link section on our homepage for your quick and easy reference. That's not the link I wanted. So again, we've got videos in more detail about how to use each of these tools to see the probabilities of Fed interest rate hikes. That guy's a little slow to load, so I'm going to start the next one up as well. Okay, so the CME Fed Watch tool. Again, now we've got 53 days until the next FOMC meeting, so 2 months worth of data. So the probability right now for a September interest rate hike is 0. So they're saying, okay, 80% chance that the Fed stays at 525 to 550 in September, only a 20% chance that they raise 25 basis points. We go to November. Now we've got a 67% chance they stay pat, 30% chance they hike a quarter, and a tiny percent chance they go 50. And now November is where they're projecting the highest probability of or December is the highest probability of the next Fed interest rate hike. So previously, I think we were seeing it in November. Now we're seeing the highest probability of the next 25 basis point hike is now in December. So again, significant change. There's still a tiny percent of people saying that it's going to be a cut. 25% saying we'll get a 50%. I guess that's 25%. We're going to get a 25 basis point hike. 60% that we're going to stay pat. So again, the probability is highest in December and November, but it's only 30%. So they're saying pretty much the Fed's going to stay flat the rest of the year. So I personally, again, none of this is financial advice. This is my opinion. This is all of our content, and this is all for education and entertainment purposes only. But I think we're going to get another 25 basis point hike, and probably September or November. Again, my opinion. So let's see if I can get the Fed rate monitoring tool up. So they're saying 80% stay, 20% in September. So 67.30 stay versus 25 basis point in November. And 60-30, 60, 20, 25% that they'll stay pat. So again, all these probabilities right now, we're saying the Fed's going to stay at 525 to 550 for the rest of this year. So again, my personal opinion, I think we're going to get one more 25 basis point hike in sometime September or November. So some of the other fallouts from this Fed interest rate hike is now, money markets, cash reserves are all paying higher rates, as well as we saw, the 30-year Treasury's now up over 4%. So, cash isn't trash. I just wanted to note Fidelity, right after that interest rate hike, raised their yield on cash reserves and 401k to, it was, I think, 477. Now it's 481. So you're getting almost 5% on idle cash. We saw Weebles offering 5%. I think some of the shorter term bonds are over 5%. So again, that's very low risk. You can sit in cash, make almost 5%. You can buy bonds, make 4 to 5%, and that may put some pressure on stocks as it's very low risk. To sit in cash or buy long-term bonds at make 4% at, again, very low risk. So again, stocks are going to have to outperform that 4 to 5%, and we'll probably talk about that in more detail when we're looking at dividend payers tomorrow. Is they need to pay or have an adjusted yield including price appreciation over 5% to really make them interesting. So again, something to think about how to trade in the fallout from this Fed interest rate hike. Is there's a lot of incentive for people to either stay in cash, buy bonds, leave their money in money markets, etc. And we may see a continued outflow out of stocks unless they're outperforming. So let me grab a quick drink. Again, we have a number of videos on how to make money trading in the summer with the stock market doldrums. Again, heading into August. August is typically, as we'll see next week, a slow month, less general volatility, less volume. And you can see the videos about, how to trade the stock market doldrums, how to trade the summer, how to trade July. And I've also got bonus links to similar videos on historically how do the stock markets perform in August and the best performing stock market sectors and industries in August. And you can access those short videos via the links in our notes, and we'll be releasing those probably this week, and then probably next week we'll talk in more detail about how to make money trading in August. So let me grab a drink, and then let's talk about um, emerging markets. Okay, Easy Mike asked in one of the Benzinga chats if we could talk about emerging markets this weekend, and he also mentioned that he had some stock, some trade ideas in those regards, and it would be great, Easy Mike and others, if you have ideas along this theme or any other topic, if you'd also post those in our Discord. Our Discord is free to join. You can find an invite to our Discord in the description box below. I'll throw it up in the banner as well. You can see as the economic data comes out, I try to post that in the Surf the Markets channel in our Discord. And we have channels on various asset classes, different trading styles, etc., trading tools, etc. So we'd encourage everyone to join and actively participate in our BeachBum Trading Community Discord. We've got a great group of traders, a bunch of great traders helping each other out, posting information, news, etc. Also, we've been talking about emerging markets for a while, and a number of markets. We talked about the Nikkei Japan. We talked about what the Bank of Japan just did. We'd seen a pretty strong run in the Nikkei, and we have a video more detail about how we're looking at trading the Nikkei. Also, we talked about the Euro stocks and ETFs to trade the Euro stocks, as well as the DAX, Australia, Brazil. And you can access these via the bonus links in the notes as well. Talked about CLIP as one way to trade China, so you can see that one. And we've got under construction the best ETFs to trade Mexico. So we've been talking about trading emerging markets now for quite some time. Can we mention that? I think that's, and I just saw a news article about one of your main major billionaire traders is going all emerging markets, all ex-US markets at this time, as it looks for an opportunity for outperformance. Emerging markets have underperformed, and now people are looking to emerging markets for outperformance. And Easy Mike is mentioning one. Is that an OTC? Because I looked that up in FinViz and couldn't find that. JPXGY. That must be an OTC, if I'm guessing. So I quickly wanted to show you some other ways to look at emerging markets, other countries, other indices. The first one is another tool in the group screener on FinViz. Is you can look at countries. So on the groups tab in FinViz, you can also select country for US listed stocks, and you can see the performance of stocks, US listed stocks from the various countries. And this was kind of interesting that on Friday, Turkey was outperforming. So We kind of would have expected maybe Japan or, well, China we saw did quite well. Europe, DAX did quite well, but the top performer was Turkey. Now, something to note is if you click on any of these countries, you can see the list of U.S. listed stocks, but you won't see ETFs here. So if I select industry and I want to see ETFs to trade that particular country, you can see the ETFs don't show up. So these again are individual stocks from that country that you can trade to look at the performance of those stocks if you're interested in that particular country. So here we can see here's U.S. Listed stocks for Japan. So that's one way that you can trade various emerging markets. If you want to trade individual stocks, see what country's outperforming, or possibly a sector rotation. So we could see India was a little negative. It's been generally positive. So again, you can look for a rotation in foreign emerging markets and try to take advantage of that as well. So another way, again, I pointed out that you can't see ETFs in FinViz via that country's tool. We use the ETF database to identify ETFs as well as FinViz, and they have a tool where, and you can find this tool in the tools section, ETF country exposure tool. So if you want to find ETFs with exposure to a particular country, you can either click on that country in the map, or you can find that country in the country list. And then, like, for example, we'll click on Japan, and we can see here's the list of ETFs with a major exposure to Japan. We can see the ones, we typically watch. There's EWJ. It'll show, it's showing things like bots. So that says it has some Japanese countries or Japanese companies and bots. So again, if you're looking for ETFs, here's a value fund, EWJV, small cap, Japan. So if you're looking for ETFs to play a particular emerging market, using this ETF country exposure tool is one way to identify ETFs that meet your desired sector, etc. And then you can dig in more detail in the ETF database. Another way in the ETF database is with their screener tool. So if you go to the screener tool under screeners, and we've used this, to identify ETFs to trade any kind of index, commodity, etc. And you select equity, and then you scroll down. You can select a whole region. So if you wanted, Asia, broad Asia, or you can select an individual country. So if we want just Japan, so again, now we can see here's EWJ, DXJ. There's a Japan hedged. There's that value fund, etc. So again, multiple ways. Here's the short one that we use, EWV. So again, that's how I identify the list of ETFs potential to trade a particular emerging market, and then we use our ETF spreadsheet to do a risk reward analysis, identify the one with the best risk reward, and then we put that in the main section of our ETF spreadsheet, and that would be our preferred ETFs to trade a particular emerging market. And you can also select additional criteria to whittle that down even further using this ETF database screener tool. And we do have a whole video also about how to use the ETF database, etc. That also covers some of these topics. So I think I'll hold our ETF spreadsheet, our ETF Google sheet. We'll look at that tomorrow. So we'll see those particular ETFs we've identified as our preference to trade the various emerging markets as we talked about. And again, you can see our discussions about each of those in these videos via the links in our document. Is there anything else, Easy Mike, that you wanted to discuss, particularly in terms of emerging markets? Again, I'd highly recommend, it'd be great if you would post additional information also in our Discord, etc. If anybody else has any questions, again, you can post them in the comments to this video in our Discord, etc. You can also contact us via our various social media sites, via the links under social media on our homepage. So again, if you have any questions about how to use any of these tools, about emerging markets, how to trade, identify ETFs, how to trade various emerging markets, again, multiple ways you can ask us questions. Tag us in the Discord. We're at BeachBum Trading. In lowercase, all one word. If you see anyone else with a pound or a number or additional characters or misspellings, then that's an imposter. So please tag us in the Discord if you have any questions, or if we can, again, help you in any other way succeed in your trading career. And again, tomorrow we'll go over our ETF Google sheet, and we'll look at some of those emerging markets ETFs as well as other ETFs. We'll also talk about dividend payers, our option strategies, etc. We'll look at technology components, again, in more detail probably tomorrow. So again, any questions you have, please let us know. Also, we would love your feedback on how we can improve our weekly trading game plans. Is there information would you like more of, less of, something different? Also our videos, our community, our goal is to help you make money and succeed in your trading career. And we need your feedback and recommendations for how best to do that so we can add more value for all of our fellow BeachBum traders and our BeachBum trading community. So please let us know how we can add that value for you and help you succeed in your trading career. And tomorrow we'll come back and we'll select our individual stocks for our top swing trading stocks to watch list, our bullpen, our shopping list. Again, tomorrow we'll review those ETFs, look for opportunities in ETFs, also in dividend payers. We'll talk about our option strategies, additional ways to make money trading in the fallout from the latest Fed interest rate hike and going forward. So again, we hope this all helps, and we hope that you like this content. We hope you'll share it. Please invite your fellow traders to join us both in our live chats on our weekly live streams. Again, part 2 will be 10 a.m. tomorrow, same bat time, same bat channel, and we'll select our top swing trading stocks to watch, etc. And thank you all for joining us, and we hope you have a great rest of your day.